All right. Good evening. Um, just a little trade analysis on Euro Swiss, that's Euro CHF. Okay, this is a monthly time frame, and I just want to draw our attention to something simple and nice. And then, so I've said it over and over again that on the higher time frame, you want to be alert on when you see price travel towards those old lows, you want to be alert at those points. You don't want to miss those opportunity that present itself around those places. So this 1 month time frame, and another thing I wanted to show us here is how that in fact price traded here so many years ago. Okay, this is around 2022. Price traded inside this fair value gap, and then we can see, of course, that was what led to the whole movement here downward. So fast forward to this place, what can we see here? An old low. So on the monthly fair value gap, you have to take note of old lows and fair value gap. Very important. So what are the things that could have helped me constitute a better trading idea seeing this? Now we'll go to lower time frame. The first one we're going to go to is the weekly time frame. So we want to check what would help us. These things actually move the market, liquidity and imbalances. Market will travel there, and then that will mark either a short-term change in the state of delivery of price or a long-term, just as you have seen and seen over and over again. So let's go to the weekly time frame. On the weekly time frame, what do we have here? So ICT has also said that before you could expect a pronounced movement, maybe higher or lower, you should expect a form of stop point. So in this case, we're expecting we actually saw the price has been going lower, but at this point, price hit an old low as in form of a stop on buy side, now sell side liquidity. You can see that actually it also happened here at this price action here. It happened there. This price took out stop on, retraced into this fair value gap here. So price also came again, hit this old low, and then you can in fact see that price begin to reject higher. So there was a stop on here. This is the first one. This is the second stop on. In fact, if you check this little area here on the weekly chart, you're going to see that there was in fact another stop on. So stop on, things like that. So these are the things you want to be mindful of on the higher time frame, especially the monthly time frame, because these things change direction of price either for a long term or for a short term. Now, how would I have traded this one? That will be the next question, and I'll just show you just an example so that we could have something to have on as we go on. So on the daily time frame, now look at what we have. The stop point on the weekly. Now this is the stop point on the daily time frame. Just this little stop point here. This is a daily time frame. So this is a whole lot of data. I waited for this trade, but having seen this kind of trade like this, you see first stop point, you see second stop point, and now I saw this when market pull higher after this stop point, and there I was waiting for price here. As I drew the fair value gap, and price in fact came inside the fair value gap, extend a little by week, but in fact price traded higher. Now we'll go back to 4 hours to check areas that would have been a lot more easier for us to have take the trade and stuff like that. But then I want to draw your attention to this downtrend movement. You can see that price has been in the downtrend, and then going down to 4 hours, we're going to check other specific things that would have helped us take this trade. Now on the 4-hour time frame, what can we see here? So we can see that price has been in a downtrend, making lower highs, lower low, lower highs, lower low, till it came here, price rose up again, making lower highs, lower low, lower highs, lower low. All of a sudden, what did we notice? Price took out stop on here, and then boom, broke market higher. Seriously. But then after this break of market structure that took a whole lot of liquidity here, we can see that market in fact retraced into a 4-hour fair value gap. Price retraced into a 4-hour fair value gap. That's very important and very, very important. A stop on break of market structure higher, and then a small fair value gap here that price would have loved to come into, and could in fact see that price retraced into it before taking this high movement. So it is this movement higher that we want to check how we would have traded it. This is a 4-hour time frame. So going forward, I want to also draw your attention to this lower highs, lower low that price has been making. Price came impulsively down here. It retraced into this area here. After then, you see that price came into this fair value gap here. And we will now go to 1-hour time frame to see a pattern by which we could trade this. Now on the 1-hour time frame, what do we have here? This is the 1-hour time frame. This is the 4 hours fair value gap. Now you can see that price has been making lower. This is an high, created a lower low. This is a lower high, broke this lower low here, created another low, lower high. Price just, you can see that evidently price was what, making a bearish movement, lower low, lower highs, until price entered into the 4-hour fair value gap. And one of the signs that will help you know that price entering a fair value gap will change the direction of the price is when something like this happen. When a break of market structure happen, you can see that the last lower high, which was not supposed to be broken through by price, was broken through by price. Yes, this movement, supposing it was supposed to continue lower, it was not supposed to break through this last lower high, but it did. Price came, broke it, and then we have a break of market structure. And according to what ICT teaches, this is one of the signs that market is going to move in the direction you have been anticipating. Supposing this does not happen, you can't take this trade. You have to see this specific price movement to be able to ascertain that yes, this is a break of market structure and I'm ready to trade it. Now this is on the hourly time frame, but before this break of market structure happen, can I actually trade this? It's very possible. Very, very possible to have been able to trade this before you see this 1 hour break of market structure. Now you need to learn how to use this, learn how to see it, learn how to anticipate it before you should actually go and use it. So if I'm the one, okay, I've seen this break of market structure, all I'll just do is to use my Fibonacci to either from here to this stop, or use the body of the candles higher here, and then I'll check 62% retracement level. So at 62 retracement level, around 62, around 50, I think, price retrace there, and then of course begin to travel higher. You can see that very, very nice logic there. Price begin to what? Price begin to try. So what I'm trying to show us is you should be able to trace your setup with sound logic. Why would you want to take a trade? Why would you want? So upon or based on established principles that have been tested and proven, those are the reasons for which you want to be taking trades. Yes. So one of those things is these are life logic. When price gets to a fair value gap and is willing to change direction, a break of market structure must tell us, and price always do this. It will always give you an hint that I want to move higher. One of the hints is a break of market structure. Now let's head on to 15 minutes time frame. Let's head on to 15 minutes time frame. Yeah, this is the 15 minutes time frame. What can we see? We can in fact see that price make an impulsive move higher, breaking this high here, invalidating fair value gaps. So having seen that before this 1 hour high was broken through, we can in fact see that after price broke this high here, price retraced into this little fair value gap that we can see on the 15 minutes time frame, and then price begin to what? Trade higher. The trade higher, it broke this last lower high of the 1 hour market structure, retracing to the 50% Fibonacci, and then you can see that price begin to what? Continue higher. So these are things that can help you take trades. Some of this setup needs you to be patient with them for them to form. If you're not patient, you might go and burn your hands. So you need to be patient, you need to wait for it, you need to be able to see it and be sure that this is what I want to do. So I've given us insight about how I look for this kind of trade. What give me assurance is that this price action, this price I'm anticipating will come. An example of it is if price is going to go higher, it will make some prints in the marketplace like stop point, and whatever you see after that stop point will determine if the market will go higher. One of it is break of market structure, and number two is if there is a fair value gap before that stop point happens and that fair value gap is invalidated, that's another sign that that market is going to change direction for the next maybe 1 day, 2 day, or short term, or even long term, as the case may be, especially when you see an old low on weekly time frame and then a fair value gap was invalidated on the daily time frame. In those kind of cases, you want to go down to your 4-hour time frame, mark out the invalidated fair value gap, and then wait for price around there. So those are live things we see in the market every day. It happens over and over again. I hope you have gotten a nice value from this presentation. Hope to see you in the next class. Do have a great time trading. And please don't forget to like, subscribe, and share to your friends. I will appreciate that. Thank you very much.